Hi everybody, it's Kia again from Car Bookkeeping Specialist. Thank you so much for joining me today. I'm really excited to show this to you. It is a video on how to save on your national insurance contributions. Now this really works if you're a limited company director, then you might want to consider this method as multiple ways to pay yourself through your company. Most often when directors are paying themselves, you might see it as happening solely through dividends, but sometimes using a combination salary and dividends can work out more tax efficient for you. So let's take a look at the example. Say, for example, you want to earn £30,000 from being a limited company director, you're the sole employee, and you want to pay yourself £30,000 in one way or another. The lower earning limit is £732 per month, and that gives you an annual salary, 732 times 12, of about £8,784 for the year. Paying yourself that amount through salary incurs no income tax, no employee national insurance because it's at that lower earning limit, and no employer national insurance. So you as an employer are not being charged any NICs, and yourself as an employee, you're not being charged any NICs either, or any income tax, because we're still below that threshold for national insurance, and we're below that threshold, we're still within our personal allowance, so we're not charged any income tax on that salary amount. So total deductions are zero, therefore your total take-home pay is 8,784 of that amount of salary, right, that you've given yourself. We've got the personal allowance still of £12,500. So 12,500 minus the 8,784 leaves us with a personal allowance amount of £3,716 that we can still take tax free. So of our £30,000 salary that we wanted, we deduct that 12,500 because we're going to put £3,716 in there extra as our salary as part of our personal allowance. Then we have a dividend allowance of £2,000 that's also tax-free. So you can take £2,000 as dividends completely tax-free. So you take that as well. That leaves you with £15,500 that you still need to take to make that total 30 grand. So you take that as dividends. You pay tax on those dividends at 7.5%, which is a total of £1,162.50, which is significantly less than what you would pay if you took the 30 grand as salary, or if you took the 30 grand solely as dividends, because you're not paying national insurance, you're not paying income tax, you're not paying employees or employers national insurance. It works out cheaper for the company, it works out cheaper for you. Now, your total take home there is 28 grand of the 30 grand in total, and you paid 1,162 in taxes. If you are at the stage where you're trying to grow your business, so this is not just about paying yourself, it's also about if you were going to take on staff and start paying salaries for people. 100%, I love and encourage people to employ other people, grow your businesses. That's what we're here for. We're trying to help you grow your businesses, and you can grow in many different ways and many different directions. So if taking on staff is one of the ways you're looking at considering, then you need to look at the salaries and how much it's going to cost you in real life as an employer, because you have that employer's national insurance contributions on top of the gross salary for whoever you choose to employ, whether that be yourself or somebody else. So, but saying that, there are grants available from HMRC that are available to pretty much to the majority of companies that help you with those NIC taxes. So it's like £3,000 a year. You get a benefit, a discount of, you don't have to pay that much anyway as an employer. There's also aid for companies who want to hire staff and take on additional people, particularly for certain industries, certain sectors, etc. There's additional help to help you pay salaries for staff. So there's multiple ways you can do it. But another way to consider would be to actually look at not taking on an employee, but looking at outsourcing or hiring a contractor or a subcontractor to do the work for you. Because in that sense, the same way salaries are a tax deductible benefit and reduce your corporation tax bill, hiring outside professional services, so hiring another company to do your admin or your VA or your bookkeeping or whatever, is also a tax deductible benefit. So it still comes off your corporation tax bill in the same way, but you don't pay national insurance. So there's the two methods there that you can look at and consider, where's the biggest financial benefit going to be for me, and choose the ones that work for you best. So I hope you found that helpful. At the very least, I hope you found it interesting. Thank you so much for sticking with me through this series. I've really enjoyed it. I hope you have as well. Please remember to like, comment, share, subscribe, and follow. And I will see you guys next time. Thank you so much. Bye.